Welcome back, traders, to the channel. Thank you for joining me. My name is Ali Casey. In this video, I will teach you how to build a profitable strategy using bias in any instrument you like. And you can build a portfolio of multiple bias strategies of the same instrument. So let's jump in. Welcome everyone to StrategyQuant's channel. My name is Ali Casey. Like I mentioned in the intro, I will teach you how to build a bias strategy, actually multiple of them, and combine them into a profitable portfolio. I will be using a tool that I build in Excel to find the edges, and then I will be using SQX to test it. But of course, you can use any tool to do that. But before we continue, I would like to ask you to smash the like button so Google Algos can push this video to other traders, as it helps the channel grow. Now let's jump in. The strategy results. I'm going to start with the results so you know what you're getting into. So this is what we are going to build, and it's a portfolio of 2 to 4 strategies, up to you, zero correlation, and as you can see, it's beautiful. So how to go about building that? Now remember, in an old video we did a bias strategy on crude oil, and through that we go to the Algo wizard and build trading hour by hour, and we build it in an Excel sheet. So that tool is today available like this. Basically, you bring in your data, which is just your 30 minutes bar, and then open high, low, and close. And then once you dump your data here, then you will get this dashboard. Basically, what this dashboard gives you, well, first of all, we get a heat map. What is the heat map? So the heat map is the activity. Even if you don't want to build a bias strategy, and let's say you want to build intraday strategy, you need to know the best time to trade this intraday strategy, which is where is the most active time window for this instrument. So here I'm tracking the EC, which is the Euro USD currency futures. This is based on 30 minutes bar. That's why you see the time increase every 30 minutes. So this is the time throughout the day. And actually it goes obviously 24 hours. And then the day of the week. And for example, this is the average volume, range in points, and range in dollars. And this is how many occurrences happened in the data set I have. So the data set I have is since January 1st, 2008. So this is roughly the number of occurrences per half hour. Now we can see clearly there is a clump of red. Red is basically hot, meaning it's active, and the blue is cold, less active. And the white is somewhere in the middle. So we can see clearly that there is a huge activity compared to the rest between 8 and 12. I say 8 because TradeStation, this data is from TradeStation, and so when you look at TradeStation, any bar based on time, the timestamp, that's the closing time of that bar. So closing time of 8:30, meaning this bar is from 8 to 8:30. And closing bar of 12, meaning this bar is between 11:30 and 12. So we can see from 8 to 12, that's the most active period we have if you want to trade the Euro FX, Euro USD future currency. Then we have this area, it also looks good, 3 o'clock to 6 o'clock. This is AM, this is EST standard time. And then somehow we have this hour between 2 and 3 p.m. on Wednesday. There must be, I think, a news every week that happens on this time. That's why this is active. In any case, so this is the heat map to know what's the best time to trade, to reduce slippage, and to find the best range. So for example, if you want to look here, this is the most active. The range in this half an hour is 457. While, for example, the range is in this half hour is $99. Obviously, you cannot capture all the range, it's almost impossible. Yes, that means you buy at the utmost high, buy at the utmost low, and sell at the utmost high. While when you have the range at $450, even if you capture 25% of that, that's more than $100. 20% of that is also still good. So that's why you're looking for the most active, is to reduce slippage and to find the maximum range available to trade that instrument. So this is great if you want to develop your own strategy, you know where the activity and range is. And then if you scroll down on this sheet, we have the averages all built in for you. And now we can see that the average win percent and the average loss percent, just a note here that sometimes they're not equal. They're not equal part to 100. So for example, this 54 and 42, that's not 100 because it's half an hour. So a lot of times the open and the close, they happen at the same time because it's half an hour. So that's why it's not 54. This should be 46. It's 42. In any case, here, this is what we want to look for bias strategies. We want to see a lump of green in sequence or red in sequence. The reason is because, like we said, half an hour is small, so we want to trade more than half an hour to capture the best possibility that we're going to make money long or short. So these two windows here, the average win-loss in dollars, and this is percent of ATR. So if we focus on this one, this is how we're going to make money if we buy the open and sell the close each half an hour. So you can see we can find a pattern. For example, Monday, this is Monday. If you look here, this is 8:30. We can see it has multiple greens all the way to 11 o'clock. So if I drag this, then you can see here, on average, this is 34 trades. Remember, this is the high, the open and close each half an hour. That doesn't mean the open at 8, it's and exit the close at 10:30 will get you $34. That's not the case because most of the time there will be overlap between them. But it's a good indication, and that's why we take the indication here and test it in SQX. So this is a good window. We try it. Now I don't include the 14 because there is a 13 before it, so it's not worth the risk to get this all the way here. And then we can find another window on Wednesday, and this time if we go look at this bunch of greens. So this one is $43. But if we stretch it, we lose here, 2 and 2. It's almost $3. But then we gain more. So that's why you want to include these, because later on, it's not like this one. We lose 13 and then we gain 14. This one, we lose 5 and we gain almost 10. And in fact, I can go even further. If you go, look, you lose here on average 4 and then you win 10. And you can actually keep going. Then you lose 7 and you make 18. And in fact, you can go all the way up to here, where you can make on average $90. So on Wednesday, from 11:30 to 11:30 midnight, you almost make $100. So that's long, and that's long. And you can see at the bottom here, it's obvious because see, here it's positive and here it's positive. So it makes sense then I should look for longs on Wednesdays and longs on Mondays. Obviously now you know that we should look for shorts on these days. The first one, obviously, look at Friday. There's a huge jump. So then let's look for a short on Friday, and this should be good. So we can see the negative starts, it actually starts way back. If you take all this, So this is minus 32, and even including this, still we're plus 19. Sorry, minus 19. So that's short. So we're making 19. And then we can keep going all the way to here. Then we get 9 and 7, 1, and then these are plus. So then it's not worth it to go long. So this is really a good short. And also we're making $92. So Wednesday and Friday already good. And then we can find something on Thursday and Tuesday probably, or Monday. We set the engine. I'm using TradeStation, and I also use TradeStation data. So it's ECTS, that's what I named it. And we start at 2008. January, and I'll make the commission $15 per trade and 1 contract. The engine is set. We're actually doing Friday 2 to 11, so it's a short. And strategy, nope. So we're looking for Friday, no shift. And also we're exiting on Friday, and we're shorting at 2, so bar time is 2, no shift, and we're exiting at 11 a.m. Bar time is 11. And let's do a back test. So it proves that this is true. Remember, this is without commission and this is with commission. Already it's an excellent strategy on its own. Although last time we make a new high was 2016, but also we're not making a huge drawdown. So in a portfolio, this is really a good strategy because you never know when it's going to come back again. So that's the short side, and we have another short. Let's do the long side here on Wednesday. Okay, I just built all 4 strategies, 2 long and 2 shorts. And you can see I use brackets with the Boolean. So you can see this bracket includes this Boolean and then or the next strategy. And this way I can switch on and off each strategy alone. So you can see now true, false, false, false. And the exit also, it's between brackets. This way you can control each strategy in the same, you don't need to like retype every time, just switch true, false, off and on. So right now we have only one, which is the Wednesday. And if I run, no, this is a quick, let's run a full back test. So this is long Wednesday. And if I switch this off and this on, and this is long Monday. And as you can see, it's not as good. Remember, this is Monday. It's a very, it's a little bit positive, not like Wednesday. So, but again, in a portfolio, it might be useful. We'll see. So let me switch this off. And now let's see this one. So this is short on Thursday. Looks good. And these are all now with the $15 trade commission and slippage. And the last short one also looks good. So now let me switch these 3 on and see how the portfolio will do. And it looks good. Now let's see if this one, even though it was bad, let's see if it's going to add something to the portfolio or not. So let's analyze the portfolio beforehand. We're making a new high almost every year now. And the stats is, it's $44 average trade. And drawdown is 34%. So let's see if we can beat that or enhance it a little bit. So still average trade is the same. And now we increase our drawdown. And we're not making any new changes. So I think no need for this strategy. Remember, we don't want to force any strategy. Like the idea of this, not to find something forcefully. Just find something. If there is an edge, take it. If there is no edge, just move on to the next instrument. So remember, now this is a portfolio of only one instrument. And imagine now building a portfolio of 10 or 15 instruments. It will be very, very robust with less drawdown and making new highs every year. Of course, this portfolio, I didn't do any market regime analysis on it. Even here in Algo Wizard, you can add an RSI or an ADX or a Kaufman efficient ratio to see if it adds extra to the portfolio or not. It has to be a significant addition. You don't want to add more filters just for the sake of it. It has to be significant. So, for example, if profit is 91 and then you add $5,000 more, I wouldn't consider that a lot. But if it takes my drawdown from 34 to 24, that's huge. So that's the addition I'm looking for. It's not just profit, it's to reduce a drawdown or reduce holding period, which is, again, affects the number of trades. And it's better to look now for more instruments that have a better edge. Great, you made it to the end of the video. Thank you for watching. I really appreciate it. If you find the video helpful, please do subscribe and hit the notification bell so you'll be notified when a new video gets uploaded to the channel. And don't forget to smash the like button, as Google algos supposedly like that. Now we'll be posting all the data and the strategy code in the Discord server. So if you're not there, please do join us. You can do that through the Patreon link down below. We're just a bunch of traders and, spit out ideas and solutions between each other. And actually, I'm now hosting almost a weekly Q&A sessions, so you can get thorough answers over there. So until the next video, stay safe and good luck with your trading, and I'll see you soon.